Hey everyone, guess what day it is? That's right, it is Mortgage Tip Tuesday with It's Your Girl, hashtag who? JLoan. Happy Tuesday. I hope that you're having a fantastic start to your week. And of course, I am bringing to you some information that I always feel is important when you are getting ready to do a mortgage. So whether it's a purchase, whether it's a refinance, whether now or in the future, whether someone you know is getting ready to buy a home, this information is hopefully information that can help them prepare for their process. So today's topic is a heated topic because it's the topic that causes most stress when you're doing a mortgage. And I am going to break down bank statements because this is one of the hardest things, and also again it stresses people out. So I want to prepare you before you go get your mortgage, and so that you can hopefully do it the right way or start to prepare for your mortgage. So the first thing to know is that most loans, whether it's FHA, conventional VA, USDA, will most likely require that you provide 2 months bank statements. Now, I get the question, well, do I have to give you all of my bank statements? No, you don't. But if money is coming from other bank statements and you're transferring money in and out of accounts, then the answer will be yes. You have to provide me 2 months of bank statements of where all the money is coming from. Okay, so that's what you really need to look at. Okay, now why do lenders want this information? Because I do get this question. Why does it matter? It matters because we're going to lend you thousands, hundreds of thousands of dollars, and we need to make sure that you know how to manage your money. We want to verify your savings, your cash flow, in and out. We want to check for unusual activity. And so if you're always getting bank statements or deposits in your account that don't correspond to your actual pay stubs, and there's just large deposits, the lenders are going to ask, where is that money coming from? Okay. So they want to check for unusual activity. So if it's not payroll and there's large deposits coming in all the time, if this is not a business bank account, they're definitely going to ask about that. They want to make sure too that you don't have any debt that we don't know about. Sometimes if you get a private loan or a personal loan, those may not report on your credit report. And there's a thing called debt to income. And debt to income tells us that we have to use all of your monthly payments against your debt to income. So if you got a private car loan and every month the lender's seeing a $300 withdrawal come out to a certain company, they're going, and it doesn't correspond with the debt that's on your credit report, they're going to ask you what that debt is. So there is no getting around it. And that's what I try to tell my clients, like, just spill the beans. Tell me what's going on. Let's see if there's a way that I can actually help you work through these bank statements or actually clean them up, okay? And then they want to make sure, obviously, that you have enough cash for your down payment and your closing costs. Sometimes we get borrowers that may not have the money right now, but maybe they have a large commission check that is coming up, and that will help with their down payment and closing costs. So we will collect 2 months bank statements at the beginning, but then we're also going to need another bank statement to verify that that money is in the account. While this process is happening, what happens to some borrowers is they forget the rule. Do not deposit any large, untrackable sources of money, because then we're going to come back to you and ask you. So I have had clients that say, oh, well, my mom gave me a gift. That still is something that needs to be tracked. There's gift letters that come with that. Your parents or your gifter is going to have to fill out documentation and provide us where they got that money from. And unfortunately, we live in a world where if they're not on a loan, sometimes they're not going to want to give us this information. So you want to make sure that you speak with your loan officer about everything that's going in and out of that account. because we want to make sure that we get you to closing and not get you hyped up for closing and then you never get there, okay? They also want to see the source of your down payment. So all sources of down payments don't always come from your actual bank account. They may come from a 401k, you may sell some stocks or bonds, you may have crypto, whatever it may be, you have to liquidate that and then it goes into your bank account. Again, you may give us 2 months at the beginning, your most recent 401k, but when you take that money out and it goes into your bank statement, now we need another bank statement. So again, it's one full circle and it's always going to come back around. So you want to make sure that you are tracking everything that's going in. And then of course, the biggest thing is they want to make sure that you're able to make your payments. They want to make sure, after closing, do they have money? Is there enough cash flow coming in every month that once we close on this mortgage, they can actually make their first payment? And I know you all aren't in the mortgage business, but we are, and we have to get on these phone calls every month about clients who sometimes never even make their first payment. So when you think about how strict mortgage are or the documentation that we need, these are the reasons why. Sometimes people qualify for a mortgage and then never make their first payment. And obviously life comes into play and things may happen, but sometimes that's not the case. So that's one. And then last but not least, reserves. There are a lot of borrowers, especially if you have borderline income, credit scores. So if you have lower credit scores, lenders want to know, are you using all of your money to buy this home and then you have nothing just in case something happens? So those are called reserves, and most lenders want to see that you have 2 to 3 months, preferably 3 months of reserves after closings for your monthly bills and your mortgage. Now, that's not always required, but I say this a lot, and I mean it. You really don't want to take on such a large obligation without having reserves, because you can no longer call your landlord and tell them that the AC is out. You have to take on these fees that are a part of owning a home. And if you don't have reserves, then the cycle comes back around where now you have to open up credit and add more debt, which doesn't help you with financial freedom. So those are the reasons why, what we look at, what lenders are looking for. Let me tell you what they don't want to see. And I have had loans turned down for this. The number one thing is NSFs, so non-sufficient fund fees that you have, which is where you spend more money than you actually have in your bank account. So when they see those fees, they look at those because that tells them that you don't know how to manage money, especially when there's multiple NSFs on your bank account or bounce checks. So bounce checks are definitely illegal. You don't want to have bounce checks, so don't write checks that you can't cash, because we do look at that, and those are reasons for your loan to be denied. And then, of course, we've already talked about it, but large undocumented deposits. They're going to ask you to not only source it, which meaning you're going to have to provide the proof of where that came from. And it normally comes with a letter of explanation saying where that came from. And then they want to make sure, obviously, the regular payments that don't correspond with your credit report. So they don't want to see debts constantly coming out that we are not tracking as far as your debt to income is concerned. But number one is NSFs. You do not want to have those on there. If so, you're going to want to wait 2 to 3 months to clean up your bank statements before applying for a home loan, as those are reasons for you to be denied. So if you have any questions, I mean, this is a lot of information, but as stated at the beginning, this is the most stressful part of providing documentation. Is sometimes I get clients that have 6 bank accounts and they're transferring money all over the place. Don't do that to yourself. Kind of clean it up. Have a house account. So if you're going to do all of that, create a house account. This is the bank account that you start saving for your mortgage, and then that will be the one that you'll use to purchase your home. I promise you, it'll make your life so much easier and less stressful when you go to buy a home. So it's your girl, hashtag JLoan. I am signing off until next Tuesday. And of course, if you have any questions, just inbox me. Let me know if there's a way that I can help you. If you have a topic that I have not touched on and you would like me to talk about it, just let me know. 817-601-5456. Hope you have a safe, a blessed rest of your week. I'll talk to you soon. Bye-bye.